Alright, and we're back with another earnings video. If you missed the SoFi one, which was an amazing quarter, that video will be in the top right corner. But now let's focus on PayPal. PayPal has gone through a little change, a major slowdown, let's say, after that huge jump that, well, COVID gave them, let's say. Now we're lapping those eBay quarters, so the second half of the year will look much better. Now there are some headwinds because of the PPP loans, everything reopening, etc. But overall, this was a good quarter for the company, still a cash flow machine. They beat also on earnings per share and on revenue as well. The numbers in this quarter, as you will see in just a bit, are pretty good. Now, with PayPal, I just have a tiny position. You might know I have SoFi and Square as well. Square is still my second largest position in my portfolio. Why did I choose PayPal? Well, because I thought it's been hurt that much, the stock. The business itself has been hurt as well, but the stock has come down tremendously. Yes, growth rates are not compared to SoFi or Square, but still, like I said, it is a cash flow machine. Now, they are repurchasing shares, etc. We're going to talk about all of that in this video. I'm going to put some tidbits from the earnings call as well. Just finish that. It was a bit interesting. We have some comments about Elliott Management as well. They have about $2 billion invested in PayPal right now, I believe. They also had communications, etc. Their goal together is to maximize shareholder value, increase revenue, profitability, etc. No talks about acquisitions of Pinterest or other things like that. Now, before we jump into this print, as always, if you want to support this channel, do check out the link down in the description below to get the top 10 best stocks to buy now, or go to full.com/investor. And make sure to check out all the other links in the pinned comment. So now let's dive into this. All right, so first couple of points from the highlights here, and then let's jump into the other interesting numbers. So first of all, new CFO, Blake, comes from EA, Electronic Arts, new CFO, very good. Then we have some cost savings, which was touched on a lot during the earnings call. So for the full year 2022 guidance, it incorporates $900 million of cost savings with annualized benefit of at least 1.3 billion in fiscal year 2023. They plan to deliver operating margin expansion in fiscal year 2023. Now, that operating margin expansion, during the call they said that it might even start in Q4. Now, with all of that cost savings, what actually happened there? Where does this money go? Where did it come from? So they are going to invest in key areas with the money saved to deliver better product experience. Now, one of the ways to reduce costs is obviously lower headcount, and also a main trigger, let's say, was the transaction-related expenses that benefited the business because of its high volume. Now, they also said that they are closing down some projects, for example, investing in stock, etc., which makes sense because we're in a semi-bear market, let's say, officially, unofficially, in a recession, so they're not focusing on that part of the whole ecosystem, investing in stocks, etc. They're putting that money into works with cards. We talked about offline sales in stores, etc. POS, with Square, Shopify. PayPal has that as well with Zettel, but they're focusing on card payments, which to them makes a bit more sense. And as I said at the start of this video, a new 15 billion share repurchase authorization. With the stock price being so low, that makes sense. Fiscal year 2022 share repurchases expected to reach around $4 billion. Some of you might say, oh, that's a lot. But if you look up here, it has $1.3 billion in free cash flow, 22% growth, and 19% of revenue. And now some key metrics here. So active accounts reach 429 million. That includes 35 million active merchant accounts that increased 6% year over year, and 400,000 net new active accounts or NNAs. Customer engagement, 48.7 payment transaction per active account. Now, during the call, they did mention that there was some reports saying that the average person, let's say, has around 800 transactions each year. 25% of those are online. And as you can see here, only 25% of those are PayPal. So the market, the opportunity here is pretty big. Now, it doesn't mean that PayPal will take it all, it just means that there is some margin to increase here. Now, that number that they gave us, 48.7, increased 12% year over year. Now, PayPal core daily active accounts are over 40% higher relative to pre-pandemic period. Now, as for TPV, that reached $340 billion, 9% spot and 13% FX neutral year over year growth. Now, as for revenue, $6.8 billion, an increase of 9% spot year over year and 14% ex eBay on a 3-year CAGR, that's spot, 16%. This is very, very confusing to speak out one after the other. 3-year ex eBay spot CAGR of 22%. Now, as for non-GAAP earnings per share, that reached 93 cents, a 19% decrease that includes approximately 11 cents per share headwind from lower eBay transaction margin dollars and lapping approximately another 11 cents benefit from credit loss reserve releases in Q2 2021. Now, as with every PayPal video, I just like to show you again the evolution of the company, right? 98, 2001, barely did anything, right? Yes, consumer plus merchant, but if you fast forward to 2019, 2022, I mean, look at all the possibilities, look at everything under the big PayPal umbrella. Now, this goes back to what I said before. Yes, the market is very, very saturated, but as you can see right here, PayPal consumer penetration across core developed markets remain below 50%, which means there is a lot of upside. Again, doesn't mean that they're going to go for 100%, but since it's below 50%, in core markets here, there is some margin. Now, total payment volume, where does that come from? So we have here P2P volume, which includes PayPal, Venmo, and Xoom, that increased 3% to $93 billion on top of 41% growth in the same quarter last year and represented 27% of TPV, a 3-year CAGR of 26% at spot. Nice for Venmo, still growing fast. Venmo right now is approximately 90 million active accounts and will probably do $250 billion in TPV this year. This is huge, and they are yet to launch on Amazon. Now, Venmo volume increased 6% to $61 billion on top of 58% growth in Q2. So you might say, yes, 6% increase, not that much. But remember, last year, they grew 58%. So it's not that bad. Then Venmo Commerce volume grew over 250% in this quarter. Now, one of the last questions on the call was regarding commerce growth. So in Q2, they said that it was flat or down if you exclude travel. Now, for the full year, at the start of the year, they expected it to be around 10% growth. Now it's down to 8-7%. But all of those, let's say, estimates are saying that it will be accelerating in the back half of the year, which is positive for a platform like PayPal. And one of the last things I want to show you here is obviously, again, like I said, Braintree. So 12% growth in TPA, transaction per active account, was driven by strong transaction growth from Braintree. Growth in PayPal transaction ex eBay also helped to offset decline in eBay transactions. Pay attention to Braintree because we're going to hear it in the next coming quarters because it becomes a very, very good segment of the business. Now, as for operating margin, as you can see, it has been trending down, but as mentioned at the start of this video during the call, they said that in Q4, they expect operating margin expansion, and that continues in fiscal year 23. All right, and full year guidance, they expect net revenue to come in at $27.85 billion. That represents a net revenue growth of around 11%. Non-GAAP EPS to come in between $3.87 and $3.97. They're raising that, by the way. And then free cash flow to come in at over $5 billion. Now, net new active accounts is expected to add around 10 million of those. So there's that. And as we said at the start of this video, share repurchasing expected to reach around $4 billion. And as for Q3, net revenue to come in at around $6.8 billion, which represents a net revenue growth of around 12% on FXN. And non-GAAP EPS to come in at between 94 cents, and 96 cents. Alright, so to conclude, and apologies because I do know this video has gone on for much longer than expected, but overall this was a very important quarter, and that's why it also has taken a bit long to record this, because in the past couple of quarters, let's admit it, PayPal wasn't that great. Yes, it got a huge push from COVID, and maybe that's why execution hasn't been that great, but that's why I feel that this quarter is maybe the pivotal one, and one that, well, puts them in the right direction. Now, obviously, again, execution is key here. Just because it's one good quarter doesn't mean that the next one will be good as well. You have to continue that momentum. But overall, PayPal is still a cash flow machine. It's still used all around the world, as you've seen from the numbers. The numbers don't lie. Now, obviously, I would like to hear your thoughts down in the comments below. What do you think about PayPal? Do you own it? Do you think of owning it? Leave it all down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And I'll see you all in the next one. Bye bye.